Bitcoin has seen some major breakdowns on the 3-day Gaussian channel and Ichimoku cloud. Historically, these levels have marked the initiation of a macro downtrend. However, in today's video, we're going to be discussing why this time might be different, as well as why Bitcoin is still undoubtedly bullish and exactly what you need to be paying attention to on the short term. Let's go ahead and jump in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day. In today's video, we're discussing the most recent correction and retest of the macro descending channel formation. We'll also be jumping deep into the short-term charts, discussing exactly what is happening and what needs to happen for the bulls to officially reclaim control. And we'll be discussing 3 major warning signs, particularly the 3-day chart, Ichimoku and Gaussian channel breakdown, as well as the weekly RSI cross. And we'll be finishing up discussing the total cryptocurrency market cap and the Bitcoin dominance charts. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion. Pure raw TA. If that is the kind of content you were interested in, join us on Telegram. This will be the first link in the description below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you're interested in taking your trading to the next level, you can join us in VIP with over 600 members. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You can find our entire trading track record in the pinned comment of the free channel by clicking this link. You can also find a video showing you inside the VIP channel, and if you're interested, contact me via my name here. Including access to the VIP, you'll also get access to our group chats, our general chat, trading chart and education chat, news, help, and daily video chat. Go ahead and check it out, guys. We'll see you in there, and let's dive into that video. So jumping into it, guys, we can see the short-term price action Bitcoin more or less holding relatively steady. We are still sitting very healthily above the range low of this macro descending channel formation as per that prior daily retest. You can see in 5 minutes time, the current daily candle is going to close, meaning we will sustain above this range low yet again. On the positive note, although we are in this macro downtrend, in this macro descending channel, this macro descending channel is bullish. It is a macro descending channel which we know as to be a bullish reversal pattern. So the expectation is that while we are able to, at least at a bare minimum, sustain within the range low of this descending channel formation, this is going to be assumed to be a very strong level of support in which we expect to be local bottoms before reversals until proven otherwise. And that is the precedent we're moving off in the video today. We'll come back and discuss this and a lot more in just a moment. Moving over to that market data, 24-hour volume, guys, is up 17% at 81 billion. 24-hour liquidations up 34% at 98 billion. Of the 98 billion in liquidation, 24 million have come from longs and 74 million have come from short positions. Moving over to the broader markets, the DXY is holding steadily. We can see on the weekly chart, we have had a macro breakdown of our high time frame, 1.5 year long symmetrical triangle formation, actually 1 year and 9 months now. We have seen the breakdown of this level, and therefore we do expect the macro expectation to be a downward move. If we take the measured move from point 1 to point 2 and apply that measured move to the exact breakdown point, you can see that takes us well under the 96 region on the DXY. Now that particular move downwards is now only expected if this current yearly low is able to break. So as you can see, we've actually deviated under this yearly low one time. This actually marked the bottom for cryptocurrency and the macro reversal point for cryptocurrency back in January 2023, as well as for the traditional markets. So a loss of this level could spark that next continuation upwards, and we will likely see the DXY plummet quite aggressively. So moving over to the S&P 500, we can see overall on the weekly, we had a pretty red weekly candle over here, engulfing 2 prior weeks of green price action. The positive note is that the weekly has still managed to sustain above 5,300, and provided 5,300 is able to sustain, this is a strong weekly level of support. In fact, this is a yearly level of support. This spans back to around March 2024. We can see that we are expecting continuations higher. For us to see that move upwards, however, we do need to break above this prior weekly high. Until then, we are in this horizontal chop range. A loss of our 5,300 support in the weekly will confirm a continuation lower. A break of 5,700, a continuation upwards. Until then, sideways price action. Some key economic events coming out very, very shortly. The 11th of September. Actually, yep, the 11th of September, we do have core inflation. We have inflation data month on month and year on year. That is going to be pretty significant in determining expectations of the coming interest rate decision, as well as our PPI data. But that big event is going to be on the 19th of September, which is the interest rate decision, as well as the Federal Reserve press conference following. Pay attention and be aware of those. Let's go ahead, guys, and jump into the rest of today's video into Bitcoin's analysis. Now, before we do, if you are interested in 15% off your trading fees, building that up to 45% off your trading fees for lifetime, and you want to support the channel, sign up to the links down below. BitUnix, BitGet, and BingX. You can sign up to those exchanges to get your discounts, get your referral bonuses, and of course, guys, support the channel. We'll play a quick ad and we'll jump back into it. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs, and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and get stuck back into Bitcoin. So in today's video, we are focusing on 3 primary analysis methods: trend, structure, and strength. As you know, these are methods we use to validate both breakouts, breakdowns, and macro trend reversals. Taking a look at, first and foremost, the macro structure. This is going to be a representation of trend and, of course, structure. It is a representation of the buyers and sellers' actions over a specific time frame and can give us an insight into developing trends, and of course, and can be a representation of the strength of price action during that specific time frame in which the structure has developed. We are currently in what we would call a descending channel formation. Now, we have seen a rejection and retest of our descending channel low over the past couple days. A fantastic retest of this level, and the most important thing is that we were able to sustain and bounce from this low point. Now, this low point has been a low point of the channel now for around 193 days, and we know this as we have had numerous retests of this low over the course of that period. We can also see we have a massive peak on the VIPV lining up with that 52,500 region, indicating we have got a massive degree of support around that region as well as we push into that level. So we do have a horizontal level of support, as well as the confluence from our diagonal structural support from our macro descending channel formation. Now, in regards to the channel, while we sustain a daily candle close above this region, the channel is technically still holding and valid. And while the channel is valid, the expectation is that Bitcoin is going to see an eventual continuation through the range high of the channel. And I know this has been a long channel. It's been 5+ months of consolidation, but descending channels, regardless of whether they play on the short term or the macro, have same and similar seller expectations. Only at the point of invalidation of this channel is the expectation denied. Only at the expectation, only at the invalidation of the macro descending channel is that expectation nullified. So we do expect the macro directional expectation to be that Bitcoin is going to break through the range high of the channel in the future, provided that lower level of support is able to sustain on the daily. The breakdown on the daily will signify that the structure in which the price action has been developing, and thus the representation of what the buyers and sellers have been doing during this period of time, have significantly shifted more and more so bearish, which could result in a high time frame continuation lower rather than what is perceived to be consolidation. So if we take an expanded view on this on the weekly chart, we had a major warning sign pop up. And in fact, we have seen a very good close on that weekly. This is going to be the weekly RSI. If we go ahead and take a look at this weekly RSI, we can see if we drag this horizontal level across from this level, we can see this is going to be our prior low point on the RSI. We have managed to close basically directly on that low point on the weekly. So not a fantastic weekly close, by all means, a pretty weak weekly close. We have closed above the 50 EMA, which is a good thing. We have closed above the descending channel low, which is a good thing, but we've managed to prolong this potential correction for another week. If we were to have seen that weekly RSI pivot below this low point in September 2023, that would have been a massive indication that momentum, which has been developing during the past 5 months during this range, has dropped to a point lower than what we saw during our consolidation back in 2023 before that continuation higher. It would tell us the price action is overextended in comparison to what we saw over here, and therefore we could potentially see a rejection and invalidation of this descending channel formation, resulting in a steeper drop for Bitcoin. Now, we can use this RSI for a positive as well. If we see a breakout of the downtrend on the RSI, that would indicate that during the period of the last 5 months, the momentum has finally flipped from negative, which is going down, to going up to positive. So we see that RSI break upwards. That is going to be a massive buying signal for Bitcoin on the weekly for a potential continuation to retest that range high yet again. So the weekly candle has closed at a sufficient level to prevent this weekly breakdown on the RSI. We have to watch how that develops over the coming week now. But there are two indicators on the 3-day chart that do not share the same what we would call leniency as what the weekly RSI showed us. These indicators have actually officially broken down. And this is why we have to discuss context. So let's talk about the indicators first, and then talk about how we can apply context to these indicators, and an understanding of how these indicators develop and what they mean will help us do that. So we'll explain that as we go. But first and foremost, identification of the significance of these indicators. What we can see, guys, we're taking a look at the Ichimoku cloud first and foremost. We can see that the Ichimoku cloud lower band, which is going to be this red line, okay, it makes the low upper band of the red clouds and crosses over and makes the lower band of the green clouds. It's going to be our lower Kumo. We broke through this level one time, and that was all the way back, well, many times historically, but all the way back, we broke through it in January 2023. This marked, from the Ichimoku perspective, the initiation of a macro uptrend, right? While we're above, we are in a macro uptrend. What we have seen now is the first 3-day candle breakdown of that respective level since the break upwards in January 2023. According to the Ichimoku Cloud indicator, this would be sufficient to assume Bitcoin is now in the start of a downtrend. Now, this is where context becomes very important, because just because we're in a downtrend doesn't necessarily mean we are in, number one, a macro downtrend, number two, going to see an extended continuation of that downtrend. Because as we know, we have 3 components: strength, structure, and trend. The Ichimoku is a representation of strength. not structure and trend. The representation of structure and trend is going to be our formation of which is going to be a descending channel. Our structure is going to be our parallel downward consolidation, and our trend is going to be the direction of which the trend lines within this structure are pointing. So we are currently within the confines of that channel. So only the breakdown of that channel accompanied with the suggestive decrease in strength represented by the breakdown of the Ichimoku cloud would be sufficient to then assume we are going to see a macro continuation and invalidation of the channel. So these levels are not insignificant. They do hold massive significance. If we're looking at them historically, they definitely do. But we need to understand the context of which these breakdowns have arisen. We have seen a 5-month-long horizontal consolidation. These indicators are mostly not only a representation of the price action, they are derivatives of the price action, but the Ichimoku cloud indicator is a representation of momentum. It's a momentum indicator. So to some degree, it is going to be lagging. So generally when we see periods of immense volatility, okay, and we know this is a period of immense volatility as the price action during that uptrend was expanding away from, at a greater degree of intensity, the upper band of the Gaussian channel, moving into a period of extended compression, we do see momentum indicators showing signs of exhaustion, which can be misrepresented or misunderstood as weakness. Now we have seen the same thing on the RSI. The RSI has been moving downward. We can see the momentum has been bleeding off during this consolidation. So it is important to not only understand the indicators you are using, but understand the context of which these indicators are printing these signals, so you do not apply too much weight to them when you shouldn't. These indicators, the breakdown of the Ichimoku, and now we can see the breakdown of the Gaussian channel, a similar thing, guys. A similar thing. We're broken below the low point. It is exactly the same thing. It is telling us we are seeing some danger signs pop up. We are under some critical levels. We need to hold our structural level of support here. Otherwise, we are going to be in big trouble. Otherwise, we could potentially see a correction back down to 49. And if we lose that, well, we're definitely going lower. This is a warning sign, but it is not confirmation that the direction of the price action is going to significantly alter, as we are still within the confines of what is going to be our structure that is determining the direction, which is an expression of the buyers and sellers' behaviors over the period of the last 5 months. Unless we see a drastic news event which can alter behaviors, we are unlikely to see this channel break at a spur. Okay, so again, something like interest rate data can influence that. But that is enough about that, guys. Let's go ahead and jump into short term. The short term price action, very simple. No need to overcomplicate it. We are at our base of support. Our macro descending channel of support, we are at it. That is it. We are at the support level. What can we see with that? Well, we can see a very slight bullish divergence over here on the 4 hour. Great to see. Again, we're taking these low points on the price action, apply it to the low points on the RSI. We can also see our descending trend line, a representation of the downtrend Bitcoin has been in since the start of September. We can say with a degree of confidence that a break above this downtrending trend line, particularly the break above our prior sell side liquidity, this horizontal level, which lines up with the 50 EMA and the downtrend, a triple area of confluence, which would meet our strength, structure, and trend, okay, SST, we will see a very likely flip in the short-term price action and continuation back into that POC, officially flipping the short-term trend bullish and facilitating a continuation back up to the midline. That is what is likely to happen while we sustain a daily close above that trend line. That is a short-term, guys. Let's jump into our total. Our total market cap looking fantastic, bouncing from the low. We are in the downtrend, but like we saw with Bitcoin, we are in the confines of what is a bullish consolidation. Fantastic. As long as we hold on to this low point, we are expecting continuations and breakouts. If we lose that low, well, then we are in a lot of trouble for continuations. And that is when I'd really be flipping bearish if we saw that total market cap officially print a bearish breakdown. Bitcoin dominance breaking down, signifying maybe altcoins will start to move a little bit. if we do see the total market cap increase and we see Bitcoin dominance drop, we do see altcoins start to move. However, it is unlikely we see a parabolic move for altcoins or a strong rally for altcoins until that uptrend that has been lasting since June 2023 is able to break. A loss of this level will likely result in a strong drop of Bitcoin dominance and a strong move for altcoins. That is it, guys. Have a fantastic day. Remember, context is very, very important in trading. Context is probably one of the most important things when it comes to analysis. Two things can happen very similar on the charts in different contexts, and the context can change the meaning. It can completely alter the meaning. So remember, when you're doing your trading, don't just look for your indicator to break down and therefore I'm going to short. You have to use context. You have to use confluence. You have to look at multiple different things to build an argument as to why something is likely to occur. The more data you bring in and process, provided you understand how to process that data, the more accurate your result is going to be. It is the same as anything. It's the same in trading. It's the same in data analytics. It is the same in pretty much everything in life where it requires you to analyze and come to a concluded outcome. So thanks for tuning in. Have a fantastic day. Catch you in tomorrow's video. See you then. Take it easy. Catch you then.